guys, this is Bilal and welcome to my YouTube channel Forex Billionaire. I've been in this field since last many years and today I'm starting my YouTube channel, and in this YouTube channel I will post my videos regarding the Forex education, the stocks and the crypto education. I will try my level best to give you the best education which I learned since last many years. I will start with the basic. I will start with the ABC of the Forex, and then we will move up to different levels. And I will try my level best to give you the expert level expertise and education as well. Dear traders, in this field, in this Forex market field, in last many years, I've learned different things. In this field, 90% traders lose their 90% capital in 90 days. Do you know the reason why? Because the lack of patience. They don't have patience in them. The lack of education. They don't try to learn in the market. They don't try to learn, and they just jump up and they start trading. Greed factor, it's a big factor, because some people start trading because they want to be millionaire, billionaire in few days. It doesn't like this market don't operate like this. You cannot be millionaire, billionaire in a days, overnight. You have to start with the raw. You have to start with the small things. So the lack of patience is the big factor. The greed factor is the big factor. Lack of education, lack of knowledge is the big factor. So these are the big factors. Because of these factors, traders cannot win in this market. So that's why the ratio of loss is up to 90%. So that's why 90% traders lose their capital in 3 months, in less than 3 months in this market. But we will try our best, and I will try my level best to give you the best education and knowledge about this market. So today we will start from the basics of the Forex, and you can see I've written there what is Forex trading. So we will start from what is Forex trading. So many people are doing trading right now, different form of trading: crypto trading, stock trading, shares trading, and Forex trading. But they don't know the basics of trading. So what is basically trading, how it operates. So let's start from here, and I will show you. First, we will start from what is Forex trading, and we will start from the definition of what is Forex trading. So stay tuned. So okay, trader, what is Forex trading? We will start from the definition of it. So Forex trading is the process of speculating on currency prices to potentially make a profit. Currencies are trading in pairs, so by exchanging one currency for another, a trader is speculating on whether one currency will rise or fall in value against the other. So this is the basic definition of what is Forex trading. So I will elaborate this definition for you. So basically in Forex trading, you are doing trading on the currency pair, different currency pair. For example, Euro USD, GBP USD, USD GPY, USD CHF, and different pairs. And in currency pair, it's defined into three stages. The major currency pairs, in which Euro USD, GBP USD, USD GPY, these currency pair come. Then the second one is minor currency pair, like Australian dollar with New Zealand dollar, New Zealand dollar with GBP, just like this. And then the third one is exotic currency pair. Those type of currency pair which are less traded or most volatile, you can say that, like USD ZAR, like USD with PKR or Indian rupees. So these are the most volatile currency pairs. So the basic definition of Forex trading tell you that in Forex trading, you are trading with currencies pair, different currencies pair of different countries. So this is the basic definition of the Forex trading. So move on to our second question. These are the questions which most of the traders ask. These are the most Googled questions. These are the most common questions which traders should know about them. So move on to our second question. What are three types of traders? 3 or 4 types of trader, you can say that. So mainly there are four main type of trader. and four main types of trading styles, you can say that. The first one is the scalper. So the scalper is a type of trader, or scalping is a type of form of trading in which a trader do a scalp trades, means for like 1 minute or 5 minute or 15-minute trades, a low time frame trades. So they buy or they sell very fastly. Immediately they put a buy or the sell in the in market, and they immediately out of the market secure their profit or the loss, whatever. So on the lower time frames, they do trading like 1 minute, 5 minute, or 15 minutes. So this is the scalping type. Now move on to the second type. It's the day trader. A day trader is a person who do trading on a little bit higher time frames, like 30 minutes, 1 hour, or up till 4 hours. So these are the time frame which a day trader used. So mainly it will take some few hours to reach the target, whether it would be take profit or the stop loss. So it takes some time in a day trading to reach the target which a trader has set the target. For example, I'm giving an example. For example, someone buy gold at 1900. So what should be the approximately take profit of a day trader? It would be like 10 to 15 points, like 1910 to 1915. So mainly a gold in a day moves 25 to 35 points in a day. So normally in a normal occasions. So this much will be the target which a day trader will be setting. Move on to the third trader, the swing trader. Basically, a swing trader is a person who take trades when a trend is going to be reversal. For example, there's a trend going uptrend, and there's some candle formation or chart formation, and because of that formation, the trend is going to be reversal. So at that time, a swing trader takes the trades, and their trades can move up to like 1 week, few days, 1 week, and up till 1 month. It takes time because they are minimum targeting 500 to 1000 pips, minimum targeting. And in this market, sometimes it takes like 2 weeks, couple of weeks, or couple of months to get that target. So basically, swing trader is looking at the higher time frames, like 1 day, 1 week, or monthly candle time frames they are looking at. Moving on to the fourth trader type or trading type, the position trader. These type of trader, the position trader, they take their positions. They wait for their position to come. They wait with the sell limit, sell stop, buy limit, or buy stop. They wait for the position. They wait for the market to reach to their position. So sometimes it takes a lot of days, a lot of weeks for them to come to the market to their points, but they wait with their limits and the stops. So these type of traders have their limits and the stops, and they're positioned, so they already know what position they have to enter. So these type of traders wait for the position, and once market reach to that position, then they take their trades. Moving on to our third question, which are commonly asked by the people: what is spot trading? So basically, I will share the definition with you. Spot trades are investment transactions in which payment and delivery happen immediately at current spot market prices. With an example, I will elaborate it. For example, in a share market, the price of an apple, one share, is $115. Just giving an example. Someone buy one share of apple at $115. Once he will purchase that one share of apple, he will completely own that share. That share will belongs to him completely. And once the market price will be up, like 130, 137, he can sold that share. So basically, this is called spot trading, in which the person who is purchasing the asset or instrument, any instrument or any share, any stocks, the person who is purchasing it, he will completely own that thing. So if a person is buying one single Apple share of $115, that share will completely belongs to him. So he will be purchasing that thing on a face value of the thing. So that's the thing which differs from other trading in spot trading. So for example, if someone is buying on $115 Apple share, he can wait until the market goes up from his purchasing price, and once it is in profit, he can sold out it. Moving on to the fourth question: what is margin trading? Let's get some definition first. In margin trading, trading on margin means borrowing money from a brokerage firm in order to carry out trades. I will elaborate it with example. For example, a trader took a trade in a gold, and the gold price is right now like 1900 plus ounce, and the trader have like $500 in his account. So logically he cannot trade on gold because he don't have enough capital. But in margin trading, the difference between a margin and spot trading is that the person, a margin trader who is doing a leverage trading, a person will be given a credit or a loan by his broker. For example, a margin trader is opening his account in ABC, any brokerage. He deposits $500, 1,000 US dollars. There is a certain amount of leverage given by his brokerage, and behind that there are so many liquidity provider to the brokerage. So that's how he is getting discount. So for example, if he have 1 by 100 or 1 by 200, 1 by 300 leverage, so that trader can do multiple trades with even have a low amount of deposit. So that's a credit loan which a broker give to his client, even having a low that's deposit. How a person can do. This is the basic difference between a spot trading and a margin trading. In a spot trading, you have to purchase the asset or instrument on a face value of it. If it is $10, you have to put $10 in it. You cannot buy it from $1. You have to completely own that. But in margin trading, if you even have $10 in your account, and if you want to trade on a $150 instrument, you can still trade on. Different broker have different leverages, but if we count as 1 by 100 leverage on an average scale, you can buy multiple instruments. You can trade on multiple instruments in margin trading. So basically, this was the difference between a margin and a spot trading. So traders, this was the first class, and I try my level best to give you the basic knowledge about what is Forex, different type of trading, and the difference between spot and margin trading. Moving on to our next classes, I will try to give you the chart patterns as well as candlestick studies. So, but I have one request from you all. So you just go, click the subscribe button, like the channel, and share it. It will just take you 30 seconds, and it's all a free education for you all. I will be providing free videos for you all. You just have to go subscribe on the notification button, just like it and share it. And if you think this is knowledgeable thing, this is going to be a good thing for other traders as well, then you can share this video to other traders as well. Thank you. See you next time.